All right. Good morning, everybody. So even with the stimulus that Hong Kong put in yesterday, after a lot of their market triggered downside lock limits, they put some stimmy in, mostly easing restrictions on liquidity, basically, and ordering the purchase of more ETFs. They're not dumping like helicopter money, all right? They're also not providing new money per se. It's more of a rotation of capital, but they're still seeing it as some sort of stimulus. And they were up nearly 4%. But after they close, just like our markets, we'll go into a Globex and then we'll have a different or a new change percent based on the Globex. They're now down, giving some of that back. Russell's down 0.5%. Hong Kong, Japan. The Dow is down the least at around 0.1%, and the UK is doing better, up 0.5%. So it's a really mixed bag, and there's been a lot of changes in the last 12 hours, just like a hamster on a wheel. We get a lot of Fed speakers today. Most of it seems to be in the later part of the day from 12, 1, 2, and then at 7 o'clock tonight. So really, we don't have a lot on the front end. The red book is going to be passed over pretty quick. Get some data out of Canada. Now this is lit, so there's a possibility that the Bank of Canada governors could say something insightful. And so, watch the clock, keep your eye on this one. And then we have additional auctions today, more in the front end. So keep your eye on the IRX index to watch that front end curve. We're still seeing really strong moves in the dollar and the 10-year. Although as we come in closer to this morning, that move in the 10-year is starting to slow down a little bit. So we got 10, 11, and then all the Fed speakers this afternoon and the auction at 1 o'clock. That's not too bad, really in the grand scheme of things, that's not too bad. I didn't get this level updated, so just a second. Put the new levels in place. Pretty timely yesterday, called the V. It was about 10 after 11 when started really discussing the idea that we should be looking for, reclaiming some levels. I don't know how soon you got into this for the move back up. Didn't quite catch it along these lows. Of course, I was busy until 11, so I wasn't quite looking for a reversal yet. But after that expansion out of the wedge, it was around 11:10, I think. So not bad for catching the recovery. Just keep in mind, while we're in this choppy state and we're likely to, try to digest some of this move, when we get these pullbacks, I don't think it's going to be this deep, but when we get a reasonably decent pullback, one of the tactics is that we gap down in the pre-market, kind of fall through the early part of the day, and then we rally back up towards the later part of the day, closing lower than we did the day before. So we're still closing lower, right? Think about that red pullback that we're talking about. We still close lower on the day, but they're just a little bit lower, because they don't want to make the whole move too fast. We don't want something like that, really big, massive bars. So this is just a regular price action perspective. If you're, used to swing trading, this logic comes easy to you. And even though we're looking at the futures, that logic was part of the reason that I was looking for a rally yesterday. So if you're thinking, well, who cares? I trade futures. I don't need that swing trade stuff. Yeah, well, maybe. That was my bias before the turn even happened, that I was thinking about this. So there's a couple of approaches to this right now. We're still inside Friday's range. We could just stay inside that range and continue to chop about. The market's still waiting on some big data, right? So it's a really wide range. And below that, we still have February 1, which is also a massive range. So a move to the downside really has a long ways to go before it gets out of that. 48.50 gets us below that and the moving averages. And it's a key, very key level in the options market. We can see from these two wicks, the last two times we got around that 49.30, it was bid back up. So that again brings us around that half back level. It's also Friday's low. We have 2 days in a row where they've defended it, higher low from yesterday. And Friday was a higher low than Thursday. So we're getting these higher lows, but across the top, we've started getting lower highs. So now we're pinching into a wedge. And the market is very much like nature. You can't compress it for too long. You have to give it a way to release some steam or it'll explode. Just the way it is, right? That's why they let water out at a dam. You got to relieve the pressure. So if this continues to fade, we're going to continue to look for things like we had yesterday. Big move in the front part to the downside and then reclaim it on the way back, closing lower than the previous close. It's not too bad. Trade Logic 101. If we are going to hold that 49.32 cog line and just digest in that zone, it's a 70-point range. It's more than enough. We could stay there all week. And we're likely to get maybe a little more expansion beyond Monday. We'll start like a megaphone pattern again. So that's what we want to be watching for. We've got layers of pivot points now to both sides, more to the downside than the upside. But for anything to really help us out today, we got to get above yesterday or below yesterday. And of course, below yesterday gets us into the 10-period moving averages, the half back level. There's so many pivot points down there. It's going to be really difficult on that downside move. There's just less restrictions to the upside. Cumulative overnight volume is fine. Nothing wrong with 80. Shows there was, a normal amount of participation. There's no hedging. So we just turn that off, get it out of the way. We're still underneath the previous week's close, so we kind of hold that as a bias. We're also underneath the volatility trigger. And yesterday, we got down into what we now have as the put wall. So 49.49, right underneath the weekly pivot point, which we also hit yesterday. We opened at the daily pivot point, and basically we're right back where we started, barely down 0.1%, 0.7%. If we consider VWAP reciprocation, we're likely to begin making a move back up, cross through VWAP, get the same on the other side. That should get us up to a retest of the Globex high. We could get stuck around that volatility trigger again, but at this point, this is a dangerous spot, just crisscrossing back and forth through the volatility trigger. We need a really good expansion one direction or another. The call wall is rolled up to 50.20. It's above last week's high, and it's on the other side of the full ADR. So, I mean, it's in reach, but that'd be a long reach. We would need some really good reasons. Any of these various Fed speakers could do it, but that's going to be later in the day. And if they did do it, then there would be a discrepancy between whatever they're saying and whatever Powell said. Zero gamma is basically 4,900. It's close enough. There's the moves that would get us down to the ADR half, 49.35. We're starting to get a TRB, so likely that we're going to challenge this half back, 49.63. If we challenge it and get to the other side, a half back breakthrough offers 25%. Then back to the Globex high, looking for a breakout to get us up into the 150. That would be a breakout that would challenge yesterday's high. So level by level. Just to add in a little bit to this, if we get that half-back break, we have the 5-minute half-back, 49.70 basically, and we have yesterday's RTH open 49.73. So just an example of how we can layer on levels without really needing any tools more than our own drawing tools. So I added the Globex open here. Easiest way to do that, just go to the daily chart, catch today's open from that candle, mark it out. So far, we've got a reasonably decent day. The flows are, coming in normal. There's no reason to anticipate any sort of hold the range mentality like we had last week going into FOMC. We don't have that mentality this week. We just have the idea that the market is sour in its mood. This is mostly all bias. The market is kind of throwing a little bit of a temper tantrum because they didn't get their way with Powell. And they're, on one hand, grumpy that the data keeps coming in strong enough that the Fed says they don't need to cut. And on the other end of it, they're happy that the data is good and the Fed doesn't have to cut. Because, I mean, you really don't want to bet against your own economy just to get a rate cut. Most of the market breadth tools continue to show extreme readings of overbought nature, right? So if you were listening to David Keller over the last week or so, he's from Stock Charts. A lot of the things that he points out is this stretched market that really should collapse upon its own weight for having reached so far. But, there's times in history where the market just continues to drive farther and farther and farther than you could ever have imagined. And then it just keeps going even beyond that. 10-day, 30-minute volume profile. We're getting more of that classic D shape. Doesn't look like we have a threat of moving the point of control today, but by the end of the week, if we stay within this chop, I wouldn't be surprised if we lose the current point of control and get it brought up. Remember that we're going to lose this volume as the week goes by. Right now, we're still knocking volume off of this lower end by what's down here on last Tuesday. But as we lose that today, the only volume that'll be left this low down will be from literally last week, Wednesday into Thursday. This is where the exuberance came in on that big pop up. So we do consider this a gap that needs closed from a liquidity standpoint. Not today, probably. $49.62. If we measure just what we have here, that's that Friday level, right? I think that turned out really good. If you missed last Friday's morning briefing where we discussed the possibility of getting one of these big bars for econ and then getting the gap close, you really missed out. Don't worry though. We get 3 of those a month. CPI, PPI, non-farm payrolls. We get that opportunity. Doesn't mean we're actually going to get the trade. The range is relatively decent. We had a kill zone move between 2 and 4, although it looked like it really hesitated for a while before that took off. There's not a lot here to work with at the moment. We just really need to get out of that range from yesterday. And since we're trapped inside of Friday, which is a big range, and to the downside, we have Thursday, which is a even bigger range. There's so many pivot points and levels to the downside that it's just a mess. Nearly 3% above the 10-week. We are on the decline. But that can be just us holding still and letting the 10 come up to us, or it can be because we're moving towards the 10 at the same time that it's moving towards us. Either way, we're obviously not overbought. We haven't moved too far too fast. It doesn't owe us a pullback. Dot plot statistics, least squared methods, linear regression. Nothing suggests that we have to come down to that 10 right now. So we can see the gray line. That's where we closed Friday, 49.72. So far this week, we're holding underneath Friday's levels. We've talked about anchored VWAP before, and I don't do it enough on a day-to-day basis, but it's something that I've started doing in my own personal morning briefings. And it's a good look on the day and a good look on the week of where we're at. So it's certainly something you should consider looking into. Anchor to VWAP. Thinkorswim has a couple of different versions. One of them is the Boulevard. I think that one does a reasonably decent job, although frustratingly, it will pick its own anchor spots sometimes. So the VWAP for the day is, I guess it helps if we get to the right market. We got an anchor for the week. We want an anchor for the day, one for the month, and one for the year. I did add an anchor as well for contract change, but I mean, I wasn't seeing anything of value on that. Here's the anchor for the year. Obviously, we're well above that anchor. I mentioned the last time we got above it that we were very likely done interacting with it for a while. Knock on wood, that's still holding. All right, I think when I was messing with this the other day, I was trying to get it to go to last month. It wants to default to the current month. And I think I found one that will do that, and it's not this one. So we'll just have to look at this month's for now, but you do want to layer them out where you have last month, last week, this week. You don't want to leave them on the chart all the time. Obviously, I'm having to put mine back on because I took them off. If you leave all of them on, it'll just be so cluttered, you won't be able to see anything, right? That just doesn't do anybody any good. So worth keeping an eye on. It looks like for the week, this is going back to Friday. So Sunday night, right? We've got Sunday night open. So Monday, Tuesday, that can't be right. Shouldn't be going all the way back to Friday. Oh, okay, that's the monthly one. Yeah. Where'd my weekly go? So for the week, we're underneath the VWAP. For the day, we're underneath the VWAP. We've got the monthly that we're above, and we have the yearly that we're above. I'm pointing all these out because one thing that you probably don't have, depending on your broker, is volume delta. And depending on how you approach volume delta, whether you're looking at only today's, the volume for the week, volume, for the current contract since it started, then you got a pretty good idea of the accumulated total volume. Is it positive or negative? Has there been more buying or has there been more selling volume? Now, I tend to look at those throughout the day because you just can't have your chart set to show all of them on the same screen. At least not with Jigsaw. So the way I run my Jigsaw is I only have candles for the current week, and every day I go in and change the dates to match so that all my candles basically start from Sunday night. And for my cumulative delta, that means that it's counting the trades for the entire week starting at Sunday night. The green lines here are the session. So if we look at that's Tuesday's trading session, this would be Monday's. I don't have enough days. Shouldn't have had to put that many on there. There we go. So there's Tuesday, there's Monday, and there's Sunday night. And I take this and look at where we're at on the day. There's the zero line. So we're in negative delta. Since Sunday night, there's been more selling volume than there has been buying volume. Of course, I keep this one different. It's only looking at today, so I get a better feel for what's been going on since the Globex last night. And I can't change that. How many candles? I can't tell it 0 days on this. So it just has, it's what I got. The idea behind this is to get a feel for who's in control, more buyers, more sellers. And then through the day, when we get divergence, and notice I didn't say if, but when we get divergence, then it really starts to stand out, help out. All right. So towards the close yesterday, obviously there was a lot of divergence, but we wouldn't want to trade that close to the end of the day. But you can see how we had price run up a lot higher to get to this previous peak compared to the delta. And then here, the delta expanded all the way, but price didn't. But again, it's so late in the day, we wouldn't want to use it. But that divergence stands out. Take advantage of the tools that you have, right? But I wanted to point this out because when it comes to delta, cumulative delta like this, sure, you can use it with the divergence like we're talking about, but you can also use it with the VWAP or like a VWAP to get a feel for where, you know, the cumulative volume is above the 0 line, below the 0 line for the day, for the week, for the month, for the contract, just like we do with the anchored VWAP. By the way, on Thinkorswim, there's that anchored VWAP for the new year. And so you can get one that will anchor for the new week, for the new year, for the new day. Even on Thinkorswim, it just does, it's kind of janky and it won't always stay anchored where you told it to anchor. So it's a little hard to trust the darn thing when it doesn't stay consistent. So because of that move that we saw in China, the China ADRs are up significantly. Baba, Baidu, JD, PDT as a group, those should be up more. Haven't looked at them individually yet, but that's going to be the expectation. And Bitcoin made a move. Now, there's this bias that we'd been looking for that suggested when the Bitcoin move was done in January, when the ETF got approved, that we would very likely see them rotate out of Bitcoin and into the China ADRs. It seemed like that's what we were starting to get as January ended and we got into February. But then that unraveled, and now we're getting these cross currents where they're both down or they're both up, or or it's divergent like we thought it was supposed to be. Today they're both up. Seems like I'm saying this a lot lately, but that's not what we're looking for. It's not necessarily that that's not what it's supposed to do. Certainly that's not what we would have wanted it to do if our theory was right. But these moves in the 10-year and the dollar and the S&P and the NASDAQ all moving in the same direction, that's certainly not what it's supposed to do. So I'm going to continue to stress caution for longer duration buy and hold stuff. The idea of a bear market and a recession and crashing back down, that's all done and gone. But there's still this capital rotation, and everybody keeps expecting to see value rise up and growth to take a break. But if you've looked at NVIDIA, it must not have got the message, and look at some of the other FANG names on the weekly and on the monthly, they're still crazy bullish. Even just the NY FANG index is still very bullish. Growth versus value on a ratio chart is still bullish. So we're not seeing that value rotation. There's the reciprocation we were looking for. Should get at least 80%, maybe 75% of this rotation on the other side, which likely would get us up into the Globex high. I'm not saying that we can't get higher than that, just that from a rotation standpoint, if we can get through VWAP, we should be able to get near the highs of the current Globex session at least. Notice it's inverse of what's going on in the dollar and the 10-year. The dollar's falling, the 10-year's falling, the S&P and the NASDAQ is rising. That's what it's supposed to do. So yay, it's acting normal this morning for now. The idea though is, will it stick? I really like what I'm seeing here. If this move holds and we continue to see more of this negativity, we could see the S&P, get through that 5,000 level and get up into the 5,010 or maybe 5,012 level. I like this. We had this this structure here at 104.5 that really held the dollar. Don't cheer too much on this. We don't want these things making overly aggressive moves. Even though a move to the downside is going to help the S&P and the NASDAQ, you don't want the dollar and the 10-year making really fast moves up or down. It's just bad for the entire market. It's like an earthquake. It might be really good for glass makers, right? People that put windows in, they might cheer it in the short term, but an earthquake knocked buildings down and tears a lot of things up. Same thing with this. So yeah, 10-year pulling back. It didn't reach that 4.2, which is kind of where a lot of analysts were looking for it to get to. This could stop at any minute. Remember that we got a little weak yesterday in the afternoon, and this is just, it was short term. We ran right back up. So we don't know how much of it is going to stick. Just take it one piece at a time. $148 for US dollar Japan and 104 for the Dixie. Let's get below that. Then we can consider the benefit of a falling dollar. We're getting a TRB in the bonds too, so should see maybe something out of TLT today, if you like trading that instrument. I don't think today we're likely to get outside of yesterday's range, but just closing in the upper portion of that would be good. If we did get a breakout, then we could consider trying to get this gap closed at 96. But that's quite a stretch for bonds. Now, I always try to point this out because this whole morning briefing thing is more about teaching you to fish than giving you a fish. When it comes to the way analysts mark a gap close, there's not a wrong way or a right way, but you want to be consistent in whichever way you choose. The way that I do a gap close is different than the way other analysts do a gap close. Some analysts will say, if we get to this candle, if price comes up and touches that wick, then the gap is closed. I'm not saying they're wrong, just that's not what I do. All right, as far as I'm concerned, price closed here and it opened here. That gap is not closed until we get back to where we closed in the first place. All right, I never changed my mind. I never changed my approach. That is a gap close. So you do whichever way you want. Neither one of them is wrong. You just have to decide which way you like better and then always do it that way. Don't change your mind and jump back and forth. 96.07 is the gap close. If we can break out of yesterday's range, then that'll be the target. Maybe likely not in a day, right? Because it's such a big move, but one day at a time, starting with the breakout. Nice TRB on BABA. TRB setup is this setup right here. And it owes us back to the top. We just had the same thing on TLT. It didn't get to the top though. It was such a big move that it just failed to get there. the reason I like them so much is because of that big candle. When you do get a TRB setup, most of the time it's a really big candle, way bigger than all of these other ones. So we're up again this morning, but not by very much in BABA, just a little bit. We closed at 74.63 and we're sitting at 76.70. And for BABA, that's not very much. I know it looks like a lot, but for BABA, that's not much. But that does leave us with a gap that needs to be closed. The discussion we were having about a downside market, how it will gap down and fall in the early part of the day and then rally back up to close lower than the previous close. That's a good way to trend down, right? Well, on the move back up, it's the same thing in reverse. Getting a big gap up in the morning, maybe even running to the upside through the morning session, and then falling down in the afternoon to close higher than the previous close. You're still getting higher highs. You're just not getting big, massive runaway expansions higher and higher and higher. So we started out with that big bar, but if we're going to slow things down now a little bit, then we're going to expect to see that kind of a run high in the early part of the day, fade back in the later part of the day, closing higher than the previous close, which gives us higher highs. We're through the 50, the 20, the 10. The only thing we have overhead is the 200. And this morning, since we're at the 78 area, BABA's all the way up at this zone here this morning. That's where we're at. So we need to keep that. Don't want to give it back. And if you zoom out and you look at it from here, this is a head and shoulders. It's ugly, but it is there. Left shoulder, head, and part of the right shoulder, although I'd say, you know, it really didn't form with as many candles as the left shoulder did. It still counts as an inverse head and shoulders, and it is really ugly. There's also earnings on the 6th, so, you know, got to be a little careful of that. I said the 6th, but I think my mouse was just in the wrong spot. Yeah, the 7th. So tomorrow morning before the open, BABA's going to have earnings. That's something to think about as you go into the close today. Having a morning earnings is nice if you plan for it the night before, because when you do have an evening earnings, they report, market makes a big move. We go into the overnight, we get up in the morning, it makes even bigger moves. And by the time you get a chance to trade any of it, it's already moved a long ways. If it reports before the open, sure, there's an hour or two before you can get your hands on it, but at least it wasn't 12 plus hours. Something to consider, whether Alibaba is going to have a decent earnings or not. Baidu is another one that's up this morning. And remember why they're up. That stimmy that China's pushing over there. And they've been trying to push it for a while. So, you know, they've been doing this for what, 3 weeks now? We've been talking about China's stimmy. And if you look at Baba and Baidu, it hasn't helped. So one day it lifted them up a little bit. Okay, what about all the other days? And this is where the door is, day one open range. If we were doing a 3-day open range, then that's our range. So for Baidu, we need to get through the 20-period moving average, that 107.64, and then aim for the 50-period moving average, this gap close up here at 110.58. I kind of like that as a target. It's possible that we have a gap here that hasn't been closed yet. I'm just not going to. Yeah, no, it's not closed. Okay, so there's two gaps to close. 108.61 and 110.62. Unlikely that we'll get any farther than that today. So we don't really need any more levels beyond that. JD, another one gapped up. This one's at 23. So that puts us above the midpoint of this bar. Ooh, just barely. 23.5. That tangles us right into the 20 period, got the 50 overhead. Got a lot of work to do in the big picture. This has been just a really great move to the downside. Short term, short duration could get a little lift to the upside because of that China stimmy, but these aren't ready to turn around. These are not bottom fishing plays for, a move back up. So JD, oh, we didn't hit. PDD. It's hard to tell if this one is getting a reflexive bounce or if it's getting some of that China stimmy or maybe a little bit of both. It had already fallen really fast. So it was kind of due for a little bit of a reflexive bounce anyways. And we're getting some China stimmy. The gap close to the downside is 117.72. But we're gapped up this morning at 125.74. So we're up near this other gap close. I would approach all of these with a little bit of caution. As a day trade, they'll probably make a nice fade, right? Get some decent put trades to the downside. But if China comes out with more stimulus through the day today, they could carry that pop and continue to push it. NEO fits in with those ADRs, just not exactly the same, but it'll do. See the gap up as well here. And that continued beat down, just like the others. XPEV is another one. I mean, look at that waterfall. We're just about due a move back into the 10 period moving average at 874. We're at 850 this morning, so we could get another 25 cents. That would give us a 10 period moving average retrace or pullback. Again, these are not bottom fishing plays. Just looking at some day trades. We are getting close to the question of, is this a double bottom? Or is this an inverse cup and handle? The question of that will answer where we go next. Yeah, I don't really advertise it that much because I'm not trying to promote the channel. But I know that there's people who, are East Coast, West Coast, lots of division, lots of distance between those two. So this is the link to today's. And once you're on that channel, you can just look at the rest of them. There's like a playlist. Been doing them for a couple of years. So you should be able to. Yep. They're always there. Just keep in mind that I don't focus on that as my number one. The Zoom is. So when I'm having technical difficulties or I'm traveling and the internet sucks, I do the Zoom and then I upload there afterwards. Just because hotel Wi-Fi, is it's something to be desired sometimes. So I like the China ADRs this morning, even if we're just going to short them from the gap up, at least it's something. I don't mind playing the indexes. Yesterday was good. Friday was fantastic. Thursday. But these range bound index days don't really leave a lot to offer. So, getting into something that has reasonably decent options like the financials and some oil names, something like that, get some good moves on the day without having to spend, $30,000 for an options contract. You seen NVIDIA's options right now? They're just crazy expensive. I've got a butterfly to adjust, and the prices are just nasty. So we got the China ADRs. Then we have Bitcoin and pot stocks, gold, healthcare, uranium. Those start getting us way below our 0.5%. Really, it all stops with biotech, which has been awesome this year. We got to get above this anchored VWAP. Gold and gold miners is trying. It's not quite at our level, but it's getting pretty close. And this is a weekly on the pot stocks. They had a rough start and really just dumped it all back down, but we're back again. If you guys remember, we were running up in the later part of the year like we were going to get something out of pot stocks, and then it all unraveled. Well, we're back to those levels again. Don't get me wrong, this is like a Wyckoff example of distribution and accumulation. We haven't made the turn yet to be in an uptrend. Still a lot of work left to do. But it's trying. It's working on it. So we're up in that space. China ADRs, Bitcoin, and pot stocks. Semiconductors are close. They're not quite there, but they're close. 0.5% would be the benchmark. To the downside, we got cloud computing down almost 1%, and consumer discretionary and nat gas. Consumer discretionary has Tesla in it. Usually that's the bully that's pushing that ETF around. A little bit of a gap down, but it's trying to come back again. Looked like Tesla tried to retest that 175, yesterday's low. We could look at this as a double bottom, but it already went too far. If it was going to be a double bottom, it should have pulled back by now. And so the fact that it didn't kind of implies that it isn't gonna, and that it's just a continuation to the downside. That gets us 158, by the way, on that measured move. This is what we measure. Lay out a warning center and the 111. We made it to a 111. It's where we paused. If we can get through the 177, I would call it. If we can get through the 175, yesterday's low, then we can aim for that 158. Also, if we're using a FEB, we can just measure the move. We don't have opposite candle color yet, so we need that. But once we do, we could lay the FIBs out and we'd look at something like a 161. This isn't where we would put it now because we don't have the candle yet to validate that, but it'll be something like 161. But if we just zoom out and look at it, we've got a very nice, distinct channel. I mean, it is very clean. It's very clear, textbook almost. So when you're running something like this and it's already made the leg down, you kind of expect you're going to get that leg up first. I wouldn't try to short this from the hole, basically, is the long and the short of it. All right, so in this, we're kind of due a little bit of a pullback just from the idea that we're on the edge and we should pull back first before continuing lower. Should doesn't mean we will. If you want something like a standard deviation measurement, you can apply Bollinger Bands. They work great for this. We're outside the Bollinger Bands now for the third straight week. So we're on a weekly. So we got down, we stayed out, we're still out. Let's do a little bit of a pullback. But it is worth noting that this downside move probably is not done. Notice how it's continuing to push that Bollinger lower. It's got to widen it out so that we can move to the downside. Just like it widened it out so we could move to the upside. For today, we've got a lot of room to work with on Tesla. I would start with yesterday. That was a really nice recovery bar yesterday afternoon. I like these big wick days. I mean, this is a red one, but it's kind of an example where we flipped around and we rallied back up and we got above our own open and closed high, and then it continued and continued. That's not what we have exactly. All of that move happened and it was bullish in the same day. What we have, it's still closed red, but it did make the drop. So closed here, opened here, dropped, and then made that loop. So we closed here, and we're going to be opening up down again. The funny thing is, I would rather gap down a lot of times than gap up. We are underneath that 50%, so call it 180 just for some easy numbers. We got to get it back above that 0.5% first. And we're not talking long-term bullish on Tesla. We're just talking about some day trades. I'd focus on getting back to the open, which is close enough to the high. You could just focus on that. 184, call it 184.50, I guess, if you want some easy numbers. And the gap to close is 188, 187.91. Level by level, get through the 50%. The close might give you a little bit of grief, but I wouldn't expect too much out of that. Still will count it, right? 181, get through that, get through the high a day, start working on this gap close. The thing about Tesla is it can make that move. I know it seems like a really long range that we're talking about. It can make that move. There are examples in the past where Tesla's had a really big day not connected to an earnings. So we know it can do it. It went from 248, to 262, basically. A 14-point move. So it can do this. It would also, if it did start to do that, there's that the TRB setup, and then there's triggering all the stops from short traders. The argument would be, if you went short that day, where would your stops be? Up there. And if you did that, you would be there with your stops, and there. So if we start breaking out, we trigger the stops on shorts. What is a stop for a short? It's a buy order, buy to close. So we trigger into buying, that pushes us up to the next level, trigger into buying into the next level. It's why the TRB works so good. And it's how we can get one single candle with such an explosive move. This is a TRB setup, and that is the explosive follow through candle. I mean, it really is a great setup when it works, right? Nothing works all the time. So we're primed for it. Usually though, if we're going to get a TRB, we would get a sideways day first. All we've had here is the drop. And if you just get a drop and a rally, you got a V. What we're expecting is the drop, you get the base, and then you get the breakout. There's also the idea that this is like a minor double bottom. And we did go lower than the previous low, just a little bit to trap the bears. I kind of like that better than an inverted cup. So we just don't know yet. Need to see it through. You got your levels though. Just get above the 180. Then the close or the open. Level by level. Everybody be careful, be safe. I'll see you all tomorrow.